Hello,
George.
fellow Level Capitalists. Hope you're well. I am here once again with my good buddy Chris Irons, back by popular demand. That last live stream we had, buddy, that was a fan favorite for sure.
Well, I can assure you, my blood pressure is much lower today. I've been meditating since last Thursday.
Just preparing for today, right?
Dude, I had a legitimate tension headache when we stopped that thing yesterday. I'm not reading any comments today, although I am agitated today if I can gripe about something very quickly.
Sure.
You know, in the world of Apple intelligence, which is supposed to be the big new hot shit thing, I asked my HomePod today, again, this happened to me last week too, and I wrote about it, but I asked my HomePod today the extremely complex question of how many days were in the month of March, because I have my planner here and you have to write the numbers out manually, you know, and so I was trying to write that out. And instead of just being like 31, you know, with all the compendium of computing power we've assembled as human beings in the last 5 million years, it's like, I don't know. Can I send some answers to your phone? I found some things on the web. I'm like, I'm asking you about the calendar. You remember those little pocket organizers you had in like the 80s? Like those things could have done that question. And then at the same time, I go to watch TV and my remote control needs a software update. The TV itself needs a software update. And I got a computer that just fucking turns off and restarts whenever the fuck it wants. So I'm just sitting here like, the future sucks. Other than that, I'm doing pretty good.
Yeah. Well, so we got to talk about this. Target came out today with earnings, a big warning like Walmart. We got to talk about the Fed recession predictor, this Atlanta GDP now thing. I've got some insider intel there that I want to go over. And we got to talk about what's happening in the market. We're seeing a big sell-off at the end of the day, which I'd like to get your take on. So a lot of stuff to talk about. But before we get into that, Chris, what do you think is the worst? You know, people assume that just because we have a new technology that it's somehow better. But I completely disagree with that. A lot is, but some of it I think it makes things far, far, far worse. So I'll just give you the worst piece of technology that I think has come out that has taken us back to effectively the Stone Age is, I think, QR code menus. I hate them so much.
What a pain in the ass.
I hate them so much that it's gotten to the point where I'll go into a restaurant and I'll say, give me a paper menu. And if they don't have
the same thing,
like I'm out.
I do the same thing. You know, the whole point of being mindful and present and being with somebody at dinner to enjoy yourself is not to be fucking around on your phone. Yeah. You know, and like I know all these dorks that go out and like the whole point of eating dinner is to take a photograph of it. They all have their phones at the ready, so they're happy to be like, yeah, just, you know, beam the fucking menu into my brain, like whatever. No, I like to sit there with a regular menu, take my time, look the person I'm with in the eyes, and let's be honest, it's usually just me by myself. But that's besides the point. If there was another person, I'd like to look them in the eyes. Sometimes I'm looking a book in the eyes. But no, seriously, I absolutely loathe that. It started during COVID. Yeah. And I started asking for paper menus then, and I continue to do it. I just did it at an Indian food place on, where was I? It was like somewhere around 29th and Lexington last week. And same deal. The guy hands me a little thing like this big, like a little fucking thing with a little stand on it. And it's got this little tiny ass QR code on it, like the size of a postage stamp. I'm like, sir, can I look at the menu? He's like, here you go. He hands me this little thing. And now I'm supposed to take the phone, right? And then I got to fucking line it up. And then I got to start scrolling through the phone. Meanwhile, speaking of innovation, that's complete bullshit. Apple, which apparently has completely run out of ideas, right? The Vision Pro sucked ass, okay? The HomePod doesn't fucking work. And now there's a button here that's where there was never a button before, right? Ostensibly, it's this camera button that's supposed to make it easier to access the camera, make it easier to zoom in, you know, save some time when you're taking photographs, because that's all everybody fucking does anymore is walk around with their camera, take a photograph. Here I am walking down the street. Oh, you know, huge. Put it in the Louvre. But now every time I'm using the phone to do something else, I'm inadvertently hitting this button. And it's opening the camera, and it's not just opening it. Other things are happening. I'm zooming, I'm taking cinematic video. It's like, I don't need to be doing this at Whole Foods or whatever I'm doing. Like, it's just ridiculous. And all I could think was, I worked for Apple during the original iPhone launch. I've been a huge Apple supporter my whole life. I'm a big buff on Apple history. Steve Jobs would have never let this fucking happen. It is in the way, and it's just in the absence of any real innovation, going from the 14 to the 16, there's Apple Intelligence, which is a new name for some bullshit that doesn't work. And there's a button now where we don't need one to be, where there never was one before, that gets in the way. So you can't hold the phone to check the weather without opening your camera app now. And I'm just thinking, like, that's it. Like, we're out of ideas. Like I said, the TV needs a software update. The other computer fucking restarts whenever it wants. And I'm buying everything at a 40 price to earnings ratio. Like, there's some great innovation runway ahead. I don't see it. All I see is my phone fucking up when I don't want it to.
Yeah.
And QR code menus.
Exactly. All right. Let's, the other thing I hate, and we'll get into it, are those damn faucets that don't have a handle, where you have to sit there and you have to put your hands there and they never work.
Yeah.
And then you got to like do this. You got to wave your hands in front of it. And then you have to go to the next faucet. And as soon as you go to the next faucet, the one that you were at turns on, and you're just like,
yeah,
the handle's such a bad idea.
It's saving you time, George. Welcome to the future. It's better for the environment. It's conserving water. It's like toilets with the 8-ounce flush. It's like, maybe some things having more water is better. Like, we have to dole out the water and prioritize it somewhere. Like, let's make sure we're getting a nice, ample flush every time we flush the water. No, people in California right now are like, oh.
All right, rant over. Now, what I'm going to do just at the end of this video, Chris, and this is a surprise, I've got a gift for you, just to ease your blood
paycheck.
Pressure. Yeah, just to ease your blood pressure. So next time you're watching CNBC, how you might be able to just laugh off all of the insanity. But before we get there, let's go over to Zero Hedge Target coming out right now. Full year outlook. So they warned of meaningful profit pressure this quarter, forecasting flat sales, citing mounting consumer uncertainty, escalating trade tensions. Part of this, I just wonder if these CEOs, whenever they have some bad news, they just kind of look at what's happening in the mainstream media and say, okay, well, we can just blame it on that. And then, like, every single CEO that comes out, if they missed, or if their forecasts are a little lower than they otherwise would have been, they all blame it on that one thing, even though that one thing may or may not have had anything to do with actually what happened with their business.
Yeah, that's what we said last week about the weather.
Yeah, exactly.
And all those companies using COVID as an excuse in their 10K. A company that was burning cash every year since the Mesozoic era all of a sudden needs to, blame it on COVID when nothing's been going right for the last 10 decades. But, oh, hey, look, there's an excuse. We might as well use it.
Yeah. Now, I'm not saying that the tariffs definitely won't slow economic growth. I think they could, but I don't think these CEOs really care about that. I think more what I'm paying attention to is what they're saying about what's happening with the consumer. And with that, I completely agree, because we can see it backed up with these sentiment surveys that we talked about last week. So the finance chief for Target, Jim Lee, wrote in a press release, February sales showed a small decline due to declining consumer confidence. We look ahead, we expect to see a moderation in this trend as apparel sales respond to warmer weather. More weather.
Well, what did they guide to?
He's saying as sales respond to warmer weather.
Yeah.
Again, as if this is something that's unique to this year.
Warm weather keeps them out. Cold weather keeps them out. You might as well just shut the whole company down at this point, because we're going to have weather every day, and apparently in your 60-year operating history, you haven't figured out a way to navigate it yet.
Yeah. Just FYI, the weather changes. Who knew?
Yeah.
And consumers turn to Target for upcoming seasonal moments, Easter holiday. Again, this is just nonsense.
It's shit that happens every year. Well, sun's out, we're fucked, like
Yeah.
shut it down.
Yeah. Okay. Then they go back to this.
All right. So what was the guide? 880 to 980 versus a consensus at 980. So a slight guide lower for this year, about 10% lower.
But look at this, Chris. Target shares are in correction territory year to date, falling nearly 50% from their peak around $266 in November of 2021.
And here's another thing. You go into Target, you want to get some toothpaste, okay? I have a Target right here in Philly, a couple streets over. Say I want to go and I want to get toothpaste. I walk in, I have to get an associate to open the toothpaste thing, right? Everybody knows about that. Fine, no problem. I hit the button. I have to wait. Associate to the toothpaste section. Now everybody's looking at me, like, oh man, what's he been doing for the last 2 days? Like not brushing his teeth? Like how bad does he need it? It draws all this attention to me, right? Then this like 18-year-old begrudgingly walks over, just dragging ass. And then a lot of times I'll say, hey, like I need to get soap too. Like, do you want to just follow me over to the soap thing? And they'll just be like, no, you got to hit the button over there too. So like some fucking hamster on a wheel trying to get a food pellet. I'm like, okay. And I walk over the next aisle and then I fucking hit the button over there. Ding, what's wrong? Like, ding, I need soap. Ding, ding, ding. Then I walk up to the counter to pay for my shit and I got to do it all myself. They got one associate managing all the self-checkouts and unlocking all the stuff for all the customers at the same time, and ostensibly probably stocking shelves, doing inventory control and everything else. So it's like, I don't know what other costs they can cut than what they've cut in stores. And I like Target too. Like as a brand, I'm partial to them. If they got down to a 10 or 12 PE, I would buy it. I don't know where they're at now.
So wait a minute. So I don't spend much time in the United States. So you're telling me at Target right now, they're locking up this toothpaste so people won't steal it?
It's not just Target. Where the hell have you been? Haven't you seen pictures? Walgreens, Rite Aid, Duane Reade in New York, Target, CVS, they're all locked up. You can't buy laundry detergent. You can't buy household cleaner. You can't buy any like medicine, shampoo, soap, toothpaste, toothbrushes, makeup. It's all locked in cabinets. I mean, this started happening in San Francisco. You had to have seen this. This can't be news to you, right?
I saw it at a Walmart when I was in Tucson, and they had the whole Walmart rearranged. So basically the drugstore part of Walmart was in its own enclosed space to where you had to go in and out with one of those turn wheels. And the turn wheel was manned by like a security guard. And then once you got inside the little space within Walmart, then you would have to do the whole, have the person come over to get a $2 pair of fingernail clippers. I saw that there.
If you want to leave, there's like a metal bar, like 3 feet off the ground that anybody could just hop over, right?
Yeah,
that's how
I
it
saw
was
it there,
in the Walmart that I went to.
I haven't seen it at other places, but what I struggle with, two things there. How can an American look at that and tell me the economy is booming or that society doesn't have any problems? And then next, I would encourage an American that thinks that's normal to come to a quote unquote third world country like Colombia and go down to the local pharmacy.
100%.
Go down to the local grocery store. And
100%.
Guess what you won't see? You're not going to see any security guards, nor are you going to see anything locked up. Nothing.
100% right. And so the funny thing is, you mentioned nail clippers. I actually had to buy nail clippers a couple weeks ago. The nail clippers were locked up. They were like, $4 a clip. And there's like Revlon lipstick at like $29.99 a pop, just wide out in the open. These things people just throw them back. So I don't know what system they're using. But you're 100% right. When I was in Amsterdam last summer, okay, I had to go get cold medicine. And I walked into a pharmacy in Amsterdam. And first off, there's no branding on any of the pharmaceuticals like there is here in the US. Everything kind of has like a generic white. And this is the case throughout most of Europe. Even in Mexico, you see this. But there was like generic branding on all the boxes. And the woman working the cashier was wearing a pharmacist's coat And I kind of made my way through the thing, and I picked out something that I thought, was the thing that I needed. It was written, everything was in Dutch. And so when I got up to the front, she was like, "Did you find everything you need?" And I was like, "I think so." I said, "I'm looking for this. Is this the equivalent? I'm looking for something with the same ingredients as NyQuil," or whatever it was that I was looking for, whatever. And the pharmacist stepped out from behind the cash register, came to the other side of the counter, stood next to me like she was my long lost friend, almost like sidled up to me, held the package with me, ran down the ingredients with me, told me that for my particular symptoms, maybe I'd be better, if I had a cough and no sore throat, or if I had a sore throat and no runny nose, or this or that and that, maybe I'd be better off with another option. It took like 10 minutes to explain the intricacies of cold medicine to me. And that, aside from everything not being locked up, was a completely different experience. I'm just looking here. On October 5th, 2023, I wrote an article on my Substack called "The Degradation and Humiliation of the U.S. Consumer." And the article was about an experience I had in Target, not just where I had to push a button to get everything I needed, like a hamster looking for a food pellet, but also with this bullshit that paper towel and toilet paper manufacturers are doing, where on the outside of their packaging, they say, "Oh, 6 rolls equals 9 rolls. 9 rolls equals 18. You're buying 9, but it's like you're buying 18 because they're triple rolls." And every single one of the packaging on toilet paper or paper towels now has this stupid photograph. I don't even know if I can share this to you or if I can give it to Josh. But Josh, if you look up "The Degradation and Humiliation of the U.S. Consumer" on my Substack, but if you just Google that, "The Degradation and Humiliation of the U.S. Consumer," my article will pop up. And if you can scroll down, you'll see what I'm talking about. Like on the outside of every Bounty package, there's some bullshit explanation for why they're giving you less. Okay. The name of the game for them is they need to give you less and they need to charge more because of inflation. That's shrinkflation. There it is. Fucking voila. Right. So you can walk into the store and you got to see this 6 equals 18, as if the Bounty Corporation or Procter & Gamble is somehow redoing 5,000 years of like Arabic numerals as we've understood them in the past. 12 equals 72. Well, I'm only buying 12, but it's like I'm buying 72. Like, how fucking stupid do you people think consumers are? So now we have to look at this bullshit explaining the shrinkflation, and then we have to walk up to a counter and we have to charge. That's me on the. That's me on the.
Monitoring in progress.
I was wringing out my paper towels, and I'm on this thing like I'm trying to bust out of Alcatraz in the movie The Rock. We've got cameras on irons. He's buying Bounty. Big fucking alarms. 6 equals 18. His math's all fucked up.
Is 18 equals 72 on every brand, or is that exclusive to
It's on everything. It's on every paper towel, and it's on every toilet paper roll that you buy. 6 equals 18. Procter & Gamble thinks you are a fucking moron if that's who makes this, because they think people look at this and they say, "Wow, I'm not getting gypped buying 6 rolls because it's actually like I'm getting 18. And imagine the surprise of every semi-conscious American when they get home and tear that thing open and there's not 18 regular rolls, there's 6 triple rolls, which, by the way, a triple roll now is like what a normal paper towel roll was probably back in the 90s. Probably the same volume, the same weight. So the degradation and humiliation of the U.S. consumer, George, that's what's going on.
I didn't even know that was a thing. Honestly, Chris, I didn't even know that was a thing. And, going back to what you're saying with the employee, I think a lot of Americans are so accustomed to being treated like they're a nuisance, whether they're at a restaurant or a Walgreens or Walmart or whatever, that they don't even, they forget that the reason the employee is there is to be helpful.
Right.
Like they're not there just to hang out on their phone, and you're not there as just an inconvenience to them. That's not the way it's supposed to work.
I walked into a Mexican place at I don't know, right by Union Square Park on Broadway a couple weeks ago. And I went to sit down at the bar, and it was my first time ever at this place. Obviously, I don't hang out there a lot, but like it was my first time ever there. And I went to go sit at the bar, and there was a menu, but it was off to the side on the bar, and I hadn't sat down yet. And before my ass was in the seat, I'm not even lying. I'm not lying. Before my ass was in the seat, I still had my bag on. I still had my coat on. I still had my scarf on. The bartender walks by. She's like, "You know what you'd like?" I'm like, "Fucking no, I haven't even sat down yet. Like, I don't even know where I'm at. Like, where am I? What is this? What is it? Is this Paris? Am I in Mexico? What building is this? What restaurant is this? Do I know what I would like?" And it's just like, it's such a difference between, somewhere like Europe, for example.
Throws you the QR code, right?
What's that?
And then when you said no, she throws you a QR code.
Oh, 100%. 100%. Get with it, George.
All right, well, let's get back to what's going on here with Target. What I'd like to do is, because we know that Walmart is saying pretty much the same thing, McDonald's, same thing, Starbucks came out and fired, I think it was 1,000 or 1,100 of their employees. So this is happening not just in certain areas, but kind of across the board. And we were talking about Joanne, et cetera, last week that is filing bankruptcy and closing all 800 stores. But I think what's interesting is to combine this with what's actually happening as far as the price action in the stock market. And I know you know a lot more about this than I do, Chris. So what I want to do is go over to what's happening in the Dow and the S&P NASDAQ right now as we speak. And it's down 670 today. But what I've noticed and what they're saying right here on CNBC is we're getting these closes where the Dow or the stock market will crash into the close. So like today, we started way down, and then we actually got positive at a certain point, if I'm not mistaken.
Yeah, we did once it was announced that Zelensky was going to sign the minerals deal tomorrow.
Oh, is that when the market went up?
Yeah.
Okay, and then in the last half hour or so of the trading day, then the market just wham, just tanks. So from a market dynamics standpoint, kind of what's happening there, Chris?
Well, I think honestly, it's a change in sentiment, right? Like one thing that would explain it is a psychological shift from buying every dip to selling every rip, right? Okay. And so when you're buying every dip, all dips are bought and the market keeps going up. And when you're selling every rip, look at that beautiful double top there. If you go back, I'm not much of a technical analysis guy. Go back to whatever chart you're at. Yeah. Right there at that old 45,000. That could be, that could be a double top for the market. That
could be in a training manual right there.
For sure. And the nice round 45,000 number acting as resistance. Anyways, not much of a technical guy. But the point is, if the market psychology has changed significantly and people believe that, we're going to have a rocky road here for whatever, a month, a quarter, the rest of the year, the psychology will change to a little bit more cautious psychology. People will be more likely to sell the rips than they are to buy the dips. And that, I think, is what's going on. I think the last 2-3 weeks, we're seeing a little bit of a shift in psychological sentiment. And also, too, I think some of it is actually Trump thinking, these next 6 months, he can kind of get his dirty work out of the way as it relates to tariffs and other things, because he can still kind of pin this on Biden. And so I saw Bissett on TV yesterday or 2 days ago when they were asking him, like, how long is it going to be before Trump takes ownership of the economy as his own? And Bissett said, probably around 6 months to a year. And what that told me was maybe Trump is okay with the idea of a little short-term pain here, which, I believe is necessary. A lot of, my readers won't find that a surprise. But maybe Trump is thinking, I'll get the trade wars, get the deals out of the way now in the first 6 months, let the market endure whatever volatility is possible or it needs, and then come in with somewhat of a Trump put and a steady hand after that and lay claim to what happens for the next 3 years of his presidency. I don't know if he's thinking that like 4-dimensionally, but I think that could be the case. I just think in general, the market is, as we went through last week before I almost had an aneurysm, the market is extremely aggressively valued. You can make a case for the market falling 40 to 50% just based on, PE mean reversion, a million different valuations without really breaking a sweat or sounding sensationalist at all. And then, as I noted to my readers in my note this morning or yesterday, and I have before too, and probably have said on the stream, the options market and the passive bid and the crypto market are all tails wagging the market dog. And what I mean by that is what used to happen is, investors and institutions and stock pickers would go in and they would buy and sell the market and buy and sell equities at certain prices. And the price of options and ETFs and those things would reflect accordingly. Right. So you had a big buyer in Apple come in, or Apple beat earnings. And then all of a sudden you'd see all the indices that Apple's included in and the ETFs kind of move higher. The options would adjust and whatever. Now, the way the market has worked over the last few years is the opposite. You have the passive bid, which is your 401ks, the constant ETF buying, the constant mutual fund buying that dictate flows into the market. So buyers into those funds then force a bid of the market overall. And you have the options market, which is really how almost all retail players are playing the market now. If you go look at Wall Street Bets on Reddit, it's only options trades. Very few people are even talking about trading stocks. I mean, I stopped trading options and I feel like a fucking dinosaur. I feel like I'm not even doing anything. Now, for me, that's great because I'm trying to take significantly less risk. But to trade only using options, what you're doing is you're causing these whipsaws for the dealers that are buying and selling the options that force them to go in and either buy or sell the corresponding equities as hedges against the options positions that they're buying and selling. Yep. And so you have the market kind of as the afterthought of the passive bid and of the options market and of the crypto market as well. Crypto's another thing. Crypto kind of is the canary in the coal mine for risk on assets. So last weekend or 2 weekends ago, you see crypto tanking over the weekend. You could pretty much assume the market's not going to be on super steady footing at the cash open on Monday. And so what I think is unique about this is I think that there is a potential for a whipsaw lower in markets if this thing really gets off the rails, and who knows. But I think with positive real rates on this debt bubble that we've had, you have an entire industry full of private credit marks that haven't been adjusted. You have an air pocket in, commercial real estate. You have a lot of people that just haven't paid the piper, and you have a lot of people that have survived on refinancing that are not going to be able to refinance at some point. And so that, I think, is going to continue to grind the gears of the economy to a halt. Liquidity is going to start to dry up. And then what we haven't really had, maybe we had it in 2020 a little bit, was when psychology changes and the market starts to move lower, you're going to get this massive buying of puts instead of calls. Now you have call buying that drives up the market. Goldman Sachs and SoftBank came out in 2020 or 2021, I believe, or maybe it was 2022, but FT wrote an article talking about how Goldman Sachs and SoftBank were responsible for the big spike in the NASDAQ off lows, and they did it through the use of options. They were buying index call options aggressively, and the market kind of followed suit. Well, the opposite's possible too, which means if something really puts a scare into retail traders, put options are just as accessible to call options to them, and they can come out, and if they take the volume, if you look at the put to call ratios, if they take the volume that's been going into calls and they flip that fucking gamma around backwards and start pouring that retail cash into puts, you may have a self-fulfilling deleveraging cycle that could occur quicker and more aggressively than we've ever seen. Because essentially the way deleveraging works, most people probably already know, but everybody that has collateral posted for any type of loan, once it falls in value, that collateral gets fire sold, essentially sold off. And it's sold at the bid usually and not the offer. And so that drives down the price of things further, which collapses other people's collateral. And then pretty soon you have 10,000 people all trying to get out the same exit door all at the same time. So with crypto, which could arguably be a $3 trillion market with ostensibly no floor, not in the way that you would have in a company like Apple, where if it got to 2 times earnings, or the cash on its balance sheet and its book value while it's still generating cash, it just doesn't make sense. Like, somebody's got to buy the whole company here. There is none of that for crypto. I mean, I have exposure to Bitcoin. I root for the Bitcoin people, but there's a lot of shit coins. There's trillions of dollars worth of garbage out there that has no floor. They provide no product, no service. So you got figure 2 trillion in crypto that could be an air pocket, with nothing underneath it. You have valuation stretched 40 or 50% higher than historical averages. You have puts coming in instead of calls, which could help unwind things quicker and faster to the downside. You have rates historically higher than they've ever been, which means that the cost of capital for people that have borrowed is the highest it's been in recent memory. And you have unemployment accelerating, which means that people are, just simply not going to have money to pay their bills. Forget about spending discretionarily on shit that they buy at Target.
Go back to passive as well, Chris. Go back to passive, because what you're saying there is very important. And I just want the viewer to understand that if you've got a pie chart of all the liquidity for the market, let's say, and more of the retail dollar is going into passive strategies, that means there's fewer and fewer dollars going into active strategies. In other words, people who are actually making a decision as to when to buy and when to sell based on the fundamentals. So let's just assume for a moment we've got 99% of the capital now in passive, and the stock market starts to go down to where that passive investor says, okay, I want my money back because I want to go into treasuries or gold or Bitcoin or whatever. Well, then that passive manager is just going to sell, but then who's going to hit the bid? Who's going to hit the bid? Because you got 99% of the market in passive and only 1% there in active that is actually able to hit the bid on those shares that are being sold, and you could hit another air pocket, to your point, that might even be bigger than what you're talking about.
And it's not just people that are saying, okay, I need to cash in my 401k now because I can't make the new payment on my adjustable rate mortgage, which is higher than it's ever been. It's not just that. It's people that are going to lose their jobs too. I mean, that's, less employees means less people buying into a 401k or buying ETFs, on an automatic recurring basis. And so that kind of foundation starts to fall out as well. So, yeah, I mean, this could be unlike any other sell-off we've had, just simply by virtue of how far up we've gone, valuation-wise. I mean, I've never seen anything like it. I wasn't really in the market around 2000, so I don't have a basis for comparison.
Yeah, nor was I.
But we didn't have 15,000 ETFs like we do now.
I want to go back to what you're saying about the narrative and the sentiment, because I think that is so crucial. And when we had Biden in office, CNBC, Bloomberg, they're all just cheerleaders. We know that. And they always have a tendency to be cheerleaders. But especially when you've got a Democrat in office, they're going to completely ignore any softening of economic data. They're going to spin everything to be as bullish as they possibly can. But now that Trump is in office, they actually have an incentive to spin things in the other direction. And CNBC really doesn't impact how I think. It doesn't really impact how you think. But you and I don't represent the average retail investor or the average Joe and Jane. And just as an example, I want to go to the CNBC homepage right now. And not every, but so many of these articles are now negative because they want to blame Trump. They're calling it a Trump session. In other words, a recession. And they're like right here. Dow tumbles again, loses more than 1,300 points in 2 days as Trump ignites trade war. Then you can just scroll.
That seems
down.
Pretty objective to me, though, that headline.
Well, no, I think it is. But my point is, if Biden was in office right now, there is no way they would blame that on Biden. I don't care what Biden was doing. Even if he was doing a trade war, even if he was doing the exact same thing, this would just say Dow tumbles again, loses more than 1,300 points in 2 days.
Hey, Biden's the sharpest guy that Joe Scarborough's ever met. Remember? Razor sharp were the words that he used. But then the guy can't fucking hear the dinner bell, okay, when the guy holds it up next to his head and is banging it at him, and he's the sharpest. He's razor sharp, according to Joe Scarborough.
But look at right here, Chris. Investors who bet on Trump light get burned. Stagflation fears bubble up as Trump tariffs take effect. The economy slows. These currencies hold allure over the U.S. dollar amid Trump regime volatility, analysts say. I mean, almost every single article is.
Yeah, Trump, that's an odd one too, because you think what Trump is doing is bullish for the dollar, right? And so for them to have an article talking about other currencies, see what they suggest. Go up there, go up to the article and click on that. My guess is going to be the yen and the fucking Swiss franc. I don't know. Let me see. Pound, right? That would have been my other. Yeah, pound would have been my other guess too.
Yen, yeah, pound and yen as the winners here. But
yeah, it's better for the dollar when you have somebody in office who is hell bent on shelling out, $1 trillion a year in foreign aid and beating the dead, deceased corpse of the U.S. dollar like it's some kind of donkey that you're trying to ride up the side of Mount Everest that's 80 years old and has done like 1 million trips up the side of the mountain, but you're still beating him senselessly. Yeah, better to beat the U.S. dollar to death than that, than to try to get the U.S. straightened out on trade, which ostensibly you would think would be bullish for the dollar, at least against these other bullshit currencies, maybe not against gold, etc. But
yeah, but so the point there, and I could just keep reading these articles that are trying to bash Trump, and now all of a sudden making people notice how the economy isn't exactly booming. This is a big shift. So the people who do pay attention to the mainstream media, back when Joe Biden was in office, I think they would have gotten all this spin and therefore looking at the world through rose-colored glasses, where now they could be getting the opposite spin from the mainstream media. And for those people who are influenced by the CNBC and the Bloombergs, they could, be more risk off, which could impact that selling with passive and all the other things that you were just talking about, as well as aggregate demand.
It's a really good point. It's actually a really good point, because the media is generally overwhelmingly making excuses for the Democrats. Everybody knows that. I mean, you can be a Democrat and admit that. And so, psychologically, it really does act as a headwind for a whole generation of investors here who have been taught nothing other than the market never goes down, no valuation is high enough, and you are deserved comfort all the time. That's what investors today think. They think that you deserve record low volatility and comfort in your investments 24 hours a day, 7 days a week. And if there's any blip on the radar at all, the Fed's got your back or the Treasury's got your back, or we'll figure it out. And that's just not the way markets work. I'm sorry.
And I think
you can get that. Go buy a CD if you want that.
Yeah, my buddy Mike Green, I think, says a similar thing. And I think it's just spot on. And that society has been trained to see the stock market as their retirement plan.
Right.
The stock market is not your retirement plan, meaning that it just goes up 10% every single year. And as long as you invest in the stock market, then that's going to take care of you when you retire, as if it's absolutely impossible for the United States to go through a Japan type scenario.
Like what Japan's going through. Exactly. And just think of the idiocy of applying that logic to any other market. Think of what people would think if somebody came by and told you soybeans, that's where you got to be. You work your whole life, you put your money in soybeans, and you're guaranteed a great retirement. Why? Because soybeans never go down. Wouldn't your next question be, are you sure? I think soybeans go down at some point. Soybean, you're telling me the price of soybeans only go up, and this brings us back to a whole, MMT versus Austrian school debate, where the nominal price of everything moves up And so idiots can be like, oh, it's getting higher, while they're paying
Well,
10 times more for a coffee this year than they were last year.
Yeah, but what you just described is pretty much 95% of the crypto investors. You know, just put your money in crypto and don't worry. It just dollar cost average, and you'll never lose. You'll never lose, and maybe not.
The old never lose guarantee, huh? Pulling that one out. The oldest trick in the finance book. But let me tell. Like, I just say one thing. There's a reason that every piece of financial literature you've ever picked up in your entire life, from the business card, the guy at your local Edward Jones office, to shit you get in the mail, to these bullshit crash-proof retirement things they put on TV and everything. There's a reason every single one of them says past performance is not indicative of future results.
Right.
That's it.
Right. Look at the more headlines. I just wanted to point out to you, Chris, here. Trump's, and this is the same CNBC homepage. I'm not bouncing around. I'm just scrolling down a little bit. Trump's Mexico-Canada tariffs are clearly going to cause inflation, says Maersk. Trump's tariffs could quickly cut North American auto production by a third. Tech stocks are down 7% since Trump's inauguration. I mean, it's just nothing.
Well, everything rallied. You got to remember, first off, everything rallied from November into the inauguration, too. So this is pretty much like a sell the news event, too, which is what this could be. Buy the rumor. Trump's coming in. He's going to be great for the stock market. Everybody bid the market up from November to, if you look at November 4th to the inauguration, the market went up. And as soon as Trump was elected, it got shaky, and then it started to come down. So this could just be a sell the news event. I like this comment here that somebody just wrote. 1 minute you're up in soybeans, the next your kids don't go to college and they repossess your Bentley. Are you with me? Yes, I'm with you. That sums it up.
Is that from Trading Places?
I have no idea.
That's from a movie.
Is it? Oh, did you steal that?
That's a quote from a movie.
Well,
I think it was. You remember the Trading Places with Eddie Murphy, Dan Aykroyd? Yeah. I think that was from Trading Places. Someone will tell.
From Trading Places. Confirmed from our listeners that it is Trading Places. Okay. Well, you lose all the points I was giving to you for originality because that made me laugh. I steal things from movies all the time, too.
All right, let's go over to Fed. Okay, so did you see this? I think we talked about that last week, right? The Atlanta Fed GDP Now indicator going from positive 2.3% down to a negative 1.5%. Did you see that?
Down again.
It went down.
It was at negative 4.5% this morning.
So let's go over here, guys, because
just a slight quadrillion-dollar correction lower, or whatever it is.
Yeah, look at this chart. So we just last week on Thursday, we were at 2.3%, and then it just plummets down to a negative 1.5. Now, what everyone was saying on Twitter, the people that kind of maybe more lean bullish, is they're saying this is total fake news. This is totally a nothing burger, because the whole reason GDP went down was because our trade deficit exploded. The goods deficit exploded from like 120 billion to roughly 150 billion. So a massive monthly move. So they're just saying, oh, this is just people front running the tariffs, and it has nothing to do with how well the economy is doing. But then we come out on Monday and they adjust it from a negative 1.5% down again to a negative 2.8%. We talked about this yesterday, but I wanted to go over some of the more specific details I didn't go into yesterday because I didn't have time to do the research. So when you look at actually, let's look at their explanation, Chris. Just FYI, they say they took it to negative 2.8 right here because nowcast first quarter real personal consumption expenditures growth and real private fixed investment goes from 1.3% and 3.5% respectively, basically down to zero. So a huge decline. And what that is really, it's mining data, or it's looking at data from the U.S. Census Bureau that was picked up in this personal income and outlay that was released on Friday by the Bureau of Economic Analysis. And here you go. Personal consumption expenditures decreased $30 billion in just 1 month. But what's fascinating is the detail. So can you see this by chance?
Yeah.
Okay, check this out. And I believe this is month over month. So they say consumer spending decreased again by 30.7 billion. And the decrease, the biggest decrease in spending was for motor vehicle and parts. That was down 41%.
You know what comes after that, right?
41%. And then look at this, recreational goods vehicles down almost 15%. And then you go down to non-durable goods, basically giving to nonprofits, clothing and footwear, food and beverage, transportation services. And then you look at what offset that to a certain degree as far as the spending that increased, and that was insurance, recreational services. But look at this, gas, energy, food, and housing.
Yeah, well, housing comes after motor vehicles. I hate to break it to everybody. So like and we talked about this a couple weeks ago, and we were talking about basically the totem pole of what people sell, to deleverage. First you get your risk on shit, your crypto, then you get your speculative stocks, your value stocks, then your bonds, then your, what any other financial assets that are conservative like bonds, then you get your vehicles, then you get your homes. And so I think the housing market could pull back as well.
Yeah, you're basically seeing Maslow's hierarchy of needs right here.
Yeah, exactly. I was just about to say that.
And then when I talk in my videos about robbing Peter to pay Paul, this is exactly what I'm referring to. Right. So the purchasing power, even though the stuff you need might be going up in price, if incomes aren't going up at the same level, then what's going to happen is people are going to have to allocate more and more of their paycheck to housing and to food. Right. Well, that means they have less and less of their paycheck to go out and buy a new car, or to go on a vacation, or to buy clothing, or to go out to a restaurant. And therefore, you could see disinflation, but at the very least, you see an economic contraction because of all these other businesses that aren't getting that aggregate demand that they got before, because the prices of the stuff you need went up. And that's very counterintuitive, because when people think of tariffs, or oil is the example I always use, they think that if oil goes to 120 or 130, well, that has to create consumer price inflation. And it actually doesn't. A lot of times that can be a catalyst to a recession because of this dynamic that we're seeing play out in front of our eyes, assuming that incomes aren't going up to the same degree.
Right. That's exactly right.
So I really want to focus on this. And I did another video today where I also want to focus, or I told the audience on a whiteboard that I want to focus on the unemployment rate, because we're down at 4%. But when you look at this chart, it's as straightforward as it possibly can be. When you see this unemployment rate trend up, like we've seen here, we've gone from 3.4 up to 4, but we hit a peak there of 4.2.
It doesn't quite move up slowly once it gets going, does it?
That's right. That's right. And so if I'm trying to time when stuff is really hitting the fan, this is something that personally I'm going to be watching like a hawk.
And that is connected to that passive bid that we talked about earlier too.
That's right.
There's a lot of reasons to watch it. Health of the economy, inflows into the stock market, general hell breaking loose.
A lot of people, when you talk about a Fed rate cutting cycle, and this has to do with the inversion of the curve and whatnot, they'll always point to the example of the mid-1990s and say, well, this is more like the mid-1990s because obviously the economy is booming, the economy is strong, and the Fed is cutting into that. So that just means the economy is going to be even better. But what they fail to realize is that yes, we did have a Fed rate cutting cycle in the mid-90s, but we didn't see the spike in unemployment. We didn't even see it trend higher, and we didn't have an inversion of the entire curve. So when you actually compare apples to apples, and you include the things like the SOM rule, which is basically a derivative of the unemployment rate, then you see that when you get that spike, it's pretty much 100%. Now, that doesn't mean that it's going to play out that way every time into the future. But again, when you look at the probabilities, the probability is very, very low that if, and I'm saying if, we get this spike that follows the trend up, which we've pretty much had every single time going back to the 1950s, right, then that's when you really need to be risk off.
I mean, look at how aggressively unemployment has moved up once it started to tick up. You know, you got 50, 55, 60, and 70. I mean, these are small moves compared to the COVID move, but look at 2008, for example, also too. I mean, it gets started, and then all of a sudden, you know, you turn around and scratch your ass and sneeze and look back at the screen, and it's out of control and it's gone parabolic.
That's right.
And so, you know, I don't know to what degree that'll happen again, but I believe that we're going to start to see it move higher, continue to tick higher. I think the trend is in place. I don't suddenly expect unemployment to start moving lower. I mean, it's pretty clear what the trend is here. The economy is slowing, unemployment is rising, inflation is being kind of stubborn and not going anywhere. Stocks are insanely overvalued. You know, people are starting to, like you just showed, sell off or at least curb their spending on autos, which I guess would be the first thing that you would do prior to selling off autos that you already own. Yep. And so, you know, it'll take a lot to stop. You know, this is like a giant tanker ship turning around in the middle of the ocean. You know, you don't just flip 180 degrees in one direction, you know, in 10 seconds. It's a big, long, gradual change, which means in order to course correct, you're going to need a big, long, gradual change in the other direction with a lag. And whether that comes in the form of stimulus or monetary policy, you know, quantitative easing, what have you, money printing, all of those things have consequences, but even them will take hold. There's this little window too, where say the Fed comes out and they cut rates tomorrow. And they say, you know, look, on the urging of President Trump, realize the economy is a little fakakta and we would like to try to course correct here. So we're going to cut 50 basis points tomorrow. You know, not only is that convoluted and probably counterintuitive given the fact that inflation is where it's at, but also psychologically, that also sends a message to the market, which is, hey, we're about to step through the threshold into hell here. And so we feel like we need to do something. And so it gets shakier and shakier until at some point something breaks. And, you know, this whole people going and taking $60 billion out of Silicon Valley Bank a couple of years ago over a weekend could be a fairy tale compared to an exodus in the markets if it happens. And I'm not saying it's definitely going to happen. I'm not saying it's, you know, going to be this crazy, sharp, out of control crash. I'm just saying that, you know, it does feel like we're out over our skis when you look at really anything related to the economy or markets. When you look at valuations, when you look at home prices, when you look at the job market, when you look at, I mean, any way you want to slice and dice it, it all kind of comes back to this fact that the Fed is stuck between a rock and a hard place. And the thing I write about, and the question I have, maybe you can answer this, is where's the blow-off valve going to be, right? There's a lot of pressure built up in this system. I used to work with these industrial processes, you know, these big chemical processes. So when something would go wrong and there would be pressure in the system where there wasn't supposed to be, there was a blow-off valve where, you know, if we hit a certain PSI, rather than having the entire system turn into a bomb, which is not conducive with, you know, running a great business, you would have a blow-off valve that would eventually just, the seal would break and the pressure would release out, you know, into the atmosphere. And so the only question is what's going to be that, you know, blow off valve for the market here. And I don't know I think maybe gold and sound money and fixed supply assets, but that's the best I can come up with.
Yeah, I think treasuries, man. This is where I have a little bit different view, maybe a contrarian view when you look at it through the lens of Austrian economics, where I just, especially if you have a big downturn, I think not just Americans, but foreigners, you know, huge pension funds outside the United States, banks in the Eurodollar system, they're just going to go into treasuries. They always do, and it makes sense as to why.
That'd be great. I'm long treasuries.
Yeah, and you see this. One thing I wanted to point out, Chris, and I know you've got a hard deadline here, but a lot of people think that, oh, well, all the Fed has to do is drop rates and then all of our problems are solved. That's going to quote unquote stimulate the economy. And that's how we avoid a recession, even though they've never been able to do that in the history of the Federal Reserve. But I want to ask the people with that view, I want to ask them the question, which matters most to the real economy? Is it the 10-year Treasury yield or is it the Fed funds rate? Well, the answer is going to be the 10-year Treasury yield. And if you think that lower rates are going to somehow stimulate the economy, I would point to the fact that over the last couple of months, the 10-year has gone from 4.8 down to call it 4.2. So you've had a 60 basis point rate cut in the last couple of months. And has that made the economic data explode higher? Is that changed the economic data? Well, maybe it made it better than it otherwise would have been, but it doesn't mean that that it prevented the economic data from softening.
That's right.
You see, that's what people need to realize, that the interest rates really don't dictate the direction of the economy. They only respond to what's happening in the economy. Now, let's see here. I just want to give you a little bit of good news here. And this is going to be your blood pressure medicine for the next time that you watch CNBC and Tom Lee. Okay. So let me switch up the screen share and we'll just go through this really quickly. Let's do this. And then I'll get back and then you can take off and then I'll get to the last topic of the day.
Yeah. And while you're doing that, I'd like to address the internet very quickly, who is writing all these comments.
Oh, I thought you weren't going to read the comments. I thought we agreed.
Well, they're much nicer today, so I can't help myself, man. I'm morbidly curious. But what I'll say is everybody's commenting about my Montreal Canadiens shirt, and I was drinking out of a Canadiens mug a couple of weeks ago, and there's a very simple explanation for that. I am Philly through and through, lived in Philly for the last 20 years. I have the Philadelphia skyline tattooed on my back. Okay, I don't have the Montreal skyline tattooed on my back. I have the Philly skyline tattooed on my back. All right, I just spent some time in Montreal, and I felt kinship with the Canadiens because they fucking lose all the time, which sucks. There's a lot of history there with the hockey team. So, kind of made them like my number 2 team. And one of my good friends is a huge Canadiens fan. Go to Montreal. It's a great city. Go for a run up Mont Royal. Go for a drink at Atwater Cocktail Club. Then leave there and go to Philemon in Old Montreal, Philemon Social Club, and spend a night there. Sip a couple of great cocktails. The bartenders will get drunk with you there. And you'll understand why I like Montreal so much. But I'm Philly through and through. So that was my address to the internet, and there will be. I'm done with that now.
All right, this guy says Philly has the worst sports fans in history.
Yeah, whatever, and a Super Bowl ring. Who gives a fuck? Like, what am I supposed to take some personal offense to that? Like, oh yeah, he's right. Yeah, sorry. What do you want? Reparations? Like.
So when
Kiss my ass.
So when I was living at my other place, my routine in the morning would be to get on my elliptical machine, do a quick workout, and I'd watch CNBC to see kind of what was going on for the day and just kind of get ready with the news. And that was the first time that I had consistently watched CNBC, and it almost made me sick to my stomach because they were just like so phony bullish, right? Like it's totally fine if you're bullish, but they were like oozing. It's almost like, ever go to LA and how the people there are really kind of artificial and
no, but I've been in New York and I can, I've seen video from LA.
Yeah, but in LA, they're like that. And it's the same thing with these anchors on CNBC where they were just so ridiculously optimistic that it just made you kind of viscerally just kind of gag. And what came to mind every single time I turned on CNBC, it got to the point where the only thing I could see in my head was that Saturday Night Live bit where the kids do the jizz in the pants thing. Have you seen that?
Yeah. Yeah, of course.
So so I would watch that. I said, you know what? That's basically CNBC. That's CNBC. Whenever anything comes out, GDP is at 3%. And then, right at the end of the song, that would just ring in my ears as to, that's exactly what's going to happen. They're going to have like a jizz in the pants moment. And sure enough, Kramer would come on and he'd do like, he wouldn't do the face, but he'd basically do the exact same. Oh my gosh, this is the greatest thing ever. This is going to be amazing. This is, you got to buy.
I had to turn it off because I would, 10 years ago or 8 years ago, whenever I first started kind of like flipping it on early in the morning, you know, it was so stupid because, you know, the Dow futures on any like random week where nothing was going on, you'd have like Dow futures up like 0.02%, like 20 points. And the anchors were like noticeably bright-eyed and bushy-tailed. They'd be like, well, Dow futures are in the green this morning, and so this, and let's fucking start our day, and I got my bagel, and I got my coffee, whatever. And then if Dow futures were down like 0.02%, like down 20 points, there was like overriding concern, like, oh, well, Dow futures are down 20 points, so fucking keep your seats. Hold on, we're going to go live to fucking so-and-so and post 4. What could be going on? You know, it's like, hey, man, we're talking about 20 points. Some guy fucking sneezed and hit the wrong thing on his keyboard. Like, what are you worried about?
But they get so bullish that it's so over the top. I think that's what I'm trying to get at here. So anyway, for the viewers that don't know what I'm talking about here, this will be our inside joke. Instead of just doing the whole jizz in the pants thing, we call it JIMP. So in the future, when you're on here, Chris, and I just quickly say JIMP, you're going to know exactly what I'm referring to. And let's go over there right now.
There it is. That's the face that a lot of the anchors make when a stock trading at 500 times earnings and 1,000 times sales goes up 1%. You know, the prophecy has been fulfilled. I got to get the fuck out of here. I love you guys. Big kiss.
All right. Bye. Have a good one, buddy. All right, now let's go over to the last article of the day. And it's Trump versus Zelensky. More of this drama, guys. And, you know, I totally get it from Trump's standpoint the other day, and we went over that in a video, so I won't rehash that. But now the White House is coming out and talking about how they need not just an apology from Zelensky, but they need a very specific apology. And it just kind of rubs me the wrong way. And the reason it does is because, look, if we really want peace, do we have to have like an apology? Fine, demand an apology, but does it have to be this specific apology? I mean, at the end of the day, we're in a nonsensical war, and real human beings are dying. Well, let's not forget that. So shouldn't the priority be ending the war as opposed to just ego that, you know, he offended me the other day because he was mean and I didn't like his tone. And therefore, in order for me to even talk to him again about proceeding with how we can end this war, I'm just going to turn my back until he kind of gets on one knee and kisses the ring. And I'm not saying that Zelensky was in the right back then or the wrong. That's not what it's all about. I'm just saying right now what the White House is coming out with, I just wish they would take a different approach. And what I tweeted, and I'll get into the story here in a moment, but what I tweeted was a thought experiment. If Trump's kids were on the front lines right now, do you think the White House would be demanding a certain preferred type of apology as opposed to trying to get this thing solved and done and over with in the most expeditious way possible to save as many lives as possible? Just think about that for a moment. Just ask yourself that question. If Trump's kids were on the front lines, would they be taking a different approach? So let's go over to the specific story. And let's see. Okay, we got that. I know it was on Zero Hedge. I should have sent this over to Josh. Did you see that story by chance, Josh?
I did not.
I retweeted it, but I don't have my Twitter up on.
I can pull it up if it's on your Twitter. You're also not sharing your screen.
Okay, yeah, go ahead and do a screen share, please, and pull it up on my Twitter. All you have to do, I don't have to get into the article, I just want to show the snapshot of what the White House said, or their official response, let's say. There we go. See, White House wants recorded apology from Zelensky, who says he wants to make things right. So, again, I'm not saying that he was in the right, he was in the wrong. Let's just shelf that for a moment. I'm just saying from this point moving forward, if the true number one priority was ending the war so as few young people die as possible, would we really be demanding not just an apology, but a very specific apology? It seems like this is almost turned into, I'm kind of asking the question there in the tweet, is this really about peace and ending the war, or is it all about ego? I don't know. You be the judge. But just the thought experiment that I use is just to ask myself, like I said, if Trump's kids were there on the front line, would the White House be taking this approach? And my guess is no. And if that's the case, then if that's really what's going on as far as ego, then I think this is the wrong approach. And it just rubs me the wrong way. That's why I wanted to talk about it. All right, guys, enjoy the rest of your afternoon. As always, make sure you are standing up for freedom, liberty, free market, capitalism. And we'll see you in the next video.